I had several conversations with Warren, and then I flew to Omaha to meet him, even though I still didn't think I was right for the job. We had a steak dinner. We had a bacon, eggs, and potatoes breakfast. We got along famously. Warren was, and is, cheerful and funny. He has a gift of metaphor that is irresistible, and as everybody now knows, he is very smart. Warren didn't look like the Xerox crowd. While he wore a suit and a tie, his wrists emerged from the sleeves, revealing an indifference to tailoring. Today, as our senior financial statesman, he is dressed impeccably, but without, I suspect, intense interest in the process. To a member of the Xerox crowd then, he looked like he had fallen off the turnip truck. I went to Warren's house on Farnham Street, which he had bought for $31,500 in 1958. It was a rambling, comfortable house. He had added a racquetball court to it. How, I wanted to know, could he operate from Omaha? In New York, the portfolio managers were all trading stories at breakfast, lunch, and dinner. Omaha gives me perspective, Warren said. He showed me a write-up from a Wall Street firm that said, securities must be studied on a minute-by-minute program. Wow, Warren said. This sort of stuff makes me feel guilty when I go out for a Pepsi. I couldn't interest Warren in the truffle hunt for the next Xerox. Our growth crowd was sniffing everywhere, talking to vendors, customers, competitors, the Phil Vischer geometry. Not that Warren didn't do research his own way. For example, Warren noticed that the bonds of the Indiana Turnpike were selling in the 70s, while the nearly identical bonds of the Illinois Turnpike sold in the 90s. The casual word among the bond crowd was that the maintenance allowance wasn't high enough behind the Indiana bonds. Warren got into his car and drove the length of the Indiana Turnpike. Then he went to Indianapolis and turned the pages of the maintenance reports of the Highway Department. He thought the Indiana Turnpike didn't need that much work, and bought the bonds. They closed the gap with the bonds of the Illinois Turnpike. Not exactly the next Xerox. Warren showed me the principles he had written out on a lined, yellow legal pad and framed. A. Our investments will be chosen on the basis of value, not popularity. B. Our investments will attempt to reduce the risk of permanent capital loss, not short-term quotation loss, to a minimum. C. My wife, children, and I will have virtually our entire net worth in the partnership. Warren had ended his partnership, so I couldn't have bought into it anyway. The partnership had bought shares in an old New England textile company, Berkshire Hathaway, and that stock was traded in the pink sheets. I looked up Berkshire. It seemed to be a failing New England textile company. Berkshire is hardly going to be as profitable as Xerox in a hyper-tense market, Warren wrote to his investors, but it is a very comfortable thing to own. We will not go into a business where technology, which is way over my head, is crucial to the decision. Berkshire's attraction was that it had $18 in net working capital, and Buffett's investors had paid $13. I didn't buy Berkshire Hathaway. At the end of my stay, I said I didn't want to work on Ben Graham's book. Warren said he didn't either. We wrote a note to Ben saying his book didn't really need any improvements. The little story about Ben and Warren went into this book. The original publisher, Random House, gave a party for the book. Warren came to the party and had a good time. We have the pictures. My hair is embarrassingly long, and Warren's haircut looks, well, mid-America. We kept in touch. Who's Warren Buffett? The people at the Washington Post Company asked when Warren bought a steak. They ordered 50 copies of Supermoney. I tried the Washington Post idea on my Wall Street friends. They couldn't see it. Big city newspapers are dead, they said. The trucks can't get through the streets. Labor problems are terrible. People get their news from television. And anyway, it wasn't the next Xerox. In 1976, Rupert Murdoch's News Corp launched an unfriendly takeover of the New York Magazine Company. I had been one of its founders, with 5-cent stock. We had spent 8 years